Hello, ladies and gentlemen. We're here today to conduct a short interview with our analyst and longtime market trader, Seth Julian. Uh, Seth, welcome to today's interview, and perhaps you could give us a short introduction, background, who you are, where you come from, etc. Surely I'd be happy to. I'm 64 years old. I'm a native of Boston, Massachusetts. Um, I was educated. I have a bachelor's degree in political economy that I earned at Columbia University. I went on to advanced study in international trade and economics at the University of Chicago and finished my formal education with an MBA at Northeastern University in Boston. I then worked on Wall Street for a number of years at an outfit called Bankers Trust Company, which was later bought by Deutsche Bank, and moved on to work for a number of brokerages houses around the world. And today I'm the chief global strategist at Alvexo. I've been trading myself for 53 years now in the capital market since I was a young man. And I was brought up in a family, many members of whom always were talking about stocks. They weren't wealthy people; they were all immigrants, but they were classic American immigrants and put away money aside to trade in the stock market. And they all had small holdings in the stock market and constantly talked about them. So I was brought up in this milieu of stocks and trading and what have you. And from that, I just developed a natural interest in high school. I became active. My father let me trade in his account. And when I went to college and graduate school, I became absolutely fixated and fascinated with the markets, actually going to the Chicago Mercantile Exchange and the Chicago Board Options Exchange and watching the insane activity and excitement that took place in what were then the open outcry pits, which are no longer, of course. I date myself. We trade now on the electronic exchanges. But nonetheless, I find the excitement the same. I find the motivations the same. And oh, yes, well, I suppose I should just finish by telling you that I'm the father of 6 children. I have a few grandchildren now. And I'm an actor. I was a veteran combat engineer in my service, and yeah, that's well. Then thank you for that, Seth. Tell me, what attracted you to the capital markets? Well, as I had mentioned, I was exposed to it as a young man and got my feet wet early on. But what attracted me to it in terms of becoming a professional trader was that it was a lucrative business. It was a high earning potential, and I wanted to I knew that I had large plans and I needed to fund them, and so that I looked for a business that could and would be lucrative. um, it's the kind of business where knowledge matters. Matters that interest me are very useful in this business. And I happen to be very interested in international relations, political economics, the relationship between business and economics. And those things can be valuable when applied to capital markets. What happens in China, what happens in the Middle East, what is developing in Europe and the European community, the former Soviet Union, the current Soviet Russian Empire, et cetera, et cetera. That kind of knowledge can be very powerful in the markets. And so, um, that attracted me. Those were all things I felt I could put to use in pursuing an independent life that I wanted. I wanted to have a lot of time to spend with my family, raising my children, which I was very lucky and did. Also, it affords independence. You get a lot of personal time. You're not a wage slave. You can dedicate your time to fitness or study, which all of which I enjoy doing. So that's really what attracted me to the capital markets. Thank you, Seth. Now, tell me, what should people understand about capital markets trading? Well, that's a good question. I would say the most important thing you need to know about successful capital markets trading, and let me just digress here by saying that lots of people trade in the capital markets for fun and excitement. Um, and there's nothing wrong with that. brokerage houses around the world make a nice living from people doing that. There's no shame in it. In fact, it's very exciting and a great deal of fun. Not particularly lucrative, but a lot of times it's not. I sort of liken it to fishing. You know, there's a secret about it, and I'm a lifelong fisherman, by the way. I've been fishing since I was a child, and I'm planning a trip in Montana, a couple of days horseback ride, if you can believe that, in and out, next summer with my brother and some family members. And there's a secret about fishing that a lot of people aren't aware of. You go fishing and you catch fish, wonderful, great experience. If you go fishing and you catch no fish, wonderful, great experience. It's not about the fish. It's about being outside in the water, seeing things in nature you really couldn't even imagine. Birds of prey hunting fish in the water, giant mammalian creatures hunting elk the size of moving vans. Just things in nature that are stunningly beautiful, not to mention the landscape or what have you. And the fish are highly secondary. Highly secondary. They're fun. It's exciting. I mean, that's the reason we go, essentially, but it's not entirely about that. Similar to capital markets trading. So people who come to the capital markets business for fun and excitement, I fully understand that. But some of the things you should try to understand if you're interested in actually making a living at this game, or being long-term profitable, perhaps is a better way to describe it, is that you need emotional control. Because the theory of making money in this business is utterly simple. You simply buy low if you think the price is going to rise, and then sell it for more than you bought it. And that difference is your profit. Conversely, if the price is falling, you sell it at a higher price than when you buy it back to replace what you sold at a lower price. Sell high, buy low. It's the opposite of buy low, sell high. It's the same idea. And that's all there is to it. I don't know what that took, less than 10 seconds to explain. But it requires no formal education whatsoever. Some of the best traders I met were former teachers, a nurse, a used car salesman. This goes back into the 1980s when Forex trading was just coming into its own on Wall Street. That's where I got interested and introduced to the market, and well, to the non-stock markets, that is. And these people were not educated in the capital markets at all. However, what they did have was the ability to control their emotions and not let greed and fear overcome them. Well, what do you mean by greed and fear? Well, let me be more specific about that. When you're in a position and you're making money, the amateur will get very excited about that. Start to see the profits and say, wow, that's great. I made enough money. I can take my partner out. We can celebrate, maybe have a nice dinner on the town. Makes more money and thinks, well, that's that $5,000 watch I've been thinking about since I was a kid. As it continues to profit, now the person's starting to lose their moorings, lose their bearings. Starting to think, well, that's a Mercedes Benz, et cetera, et cetera. That's it goes up to, becomes so profitable that they've made enough money for a down payment for a second home. By this point in time, of course, they're completely lost their marbles. They're fantasizing off the end of the run, the boardwalk, and the position is turned and they're starting to lose money. But they're so gone with the greed, and because greed is a powerful emotion, and we all possess that emotion, and it blinds you. It makes your sensibilities weakened, and therefore, when the position starts to return, well, they say, well, I didn't really need that second home, but that car, that luxury car, that would be quite a feather in my cap, and by that time it's gone, and then the watch, and et cetera, and that's how, by the way, well, let me continue. That's the good case. In the worst case, where the position opens and it immediately turns into a loss, the amateur will say, well, I'm probably right, but the market's just not. I'm just too early. Too early. You hear that a lot. I'm too early. So I'm just going to wait it out as the loss grows and grows. And again, the fear of seeing your money just evaporate right in front of your eyes, and the ego, the buffeting of your ego that occurs as this position becomes greater and greater, a loss for, whereas the professional would say, I've seen the loss, I've reached the maximum loss I will tolerate, and I will press the closed position button and admit my loss as an adult, and lick my wounds and have my capital for yet another trading battle tomorrow. The amateur can't really face that reality because before he closes the position, he doesn't actually have a loss. It's only on paper. So he just sees the loss grow and becomes more frightened and fearful and unable to actually take his lumps, as it were. And that is exactly how intelligent people lose their trading account. And in the interest of full disclosure, let me tell you that I have lost my own personal trading account 3 times in my life, twice with quite sizable sums of money. So the second thing I would say that it's important about, the third thing, I guess, if we're counting about what people should understand about trading, is that it's a business, like any other business, and you have to have an approach in a business-like manner. You have to control those emotions. You can't let them overcome you and blind you and incapacitate you. A few other things I might say is that you need patience. It's like, as I say, it's a business, and you need practice and patience and cash to succeed. It doesn't come easy. Don't believe the nonsense you read on the internet. It's always the same young, attractive couple in a hammock on a desert island with a laptop holding drinks with little umbrellas in them making money. This is utter nonsense, and pay no attention to such claptrap. It's a business, and you have to work hard at it, and you have to put your time in, and you have to do your homework. Another point I would mention about people needing to understand about trading is not to overcomplicate it, particularly for newcomers coming into the business. There's a tendency to want to have every indicator in the world on your charts and make sure you've got everything buttoned down and every possible angle covered. And that's not how it works. You want to have less is more. Use just a few indicators. Come up with a basic approach, a basic strategy to how you want to make money in this. Don't overcomplicate it, because it's not complicated. It's not a complicated. It's an emotional business, and and I guess this is the final note I'll make about things that people need to understand, is that all of these graphs and charts and indicators and oscillators and all of these tools that you see traders use and talk about in the media all the time are not scientific tools. This is not a deterministic endeavor. This isn't hard science. This isn't physics or biology or chemistry or anything upon which you can build using these scientific tools. The tools are scientific, but they're graphing non-scientific or pseudo-scientific phenomena. They're graphing human emotion. And when you see a price chart, as NASA-like, as Cosmodrome-like as it might appear, it's nothing of the sort. It's measuring human emotional attachment to a particular asset, be it gold or oil or Tesla or what have you. And that chart which is nominally a chart of the price, is a chart of the human emotional attachment to the asset, measured in dollars or pounds or euros, what have you. So don't overcomplicate it. Remember that the key is trying to understand your emotionality principally, and of course the market's emotionality secondarily, and controlling them and understanding them. You don't need a million tools. You don't need a million indicators. Thank you, Seth. Do you have a strategy that you use? Oh, of course I do. As I say, it's a business for me. I've been in the business for decades upon decades, and I do and have managed money for clients for quite a long time. I started out with friends and family, and have a fund that I manage, and yes, of course I have a strategy. The basics of the strategy are quite simple. Again, it's important to keep things simple, I believe. First strategy, of course, is to stay alive, and until I learned how to implement that strategy, as I mentioned, lost a considerable sum of money. The tuition in this business is cash. Now, you might say, well, the tuition in any business, in dental school, in teacher's academy, in mechanics class, whatever it is, you have to pay in cash. Yeah, but there's also a lot of hard work and effort that's put in the library, reading books and studying. Here, you have to pay cash just to get the experience, to study. The study, the material, the study material, so to speak, is the experience, particularly of loss, but also of gain. But it requires cash. So the first element of my strategy, of course, is to stay alive, minimize my losses. There's an old saying in Wall Street that if you minimize your losses, the profits will run. That's true over time. I believe it was true in my case after considerable losses, but it's true, and I believe it, and many other people will believe that as well. My overall tactical strategy is simply to identify a trend and to understand it and know why price is moving in that direction. So yes, I'm a trend follower, as most of us are. There's the old aphorism, the trend is your friend, and that's an old aphorism for a good reason. It's true. And in understanding why, that is what I would consider my edge. Your edge is the advantage you may have, or you do have when you enter a trade. You understand things well enough so that the trade will go your way long enough so you can make a few dollars and get the hell out of the position with a profit. That's the whole game. That's all there is to it. But you need an edge. You need something that is just going to give you an advantage. An edge is a jargon term for advantage. So the advantage I use is I try to understand why, not only technically speaking, that it's above resistance or above a certain moving average, or oscillators are indicating this or that or the other thing, which I use. The oscillator I use, of course, is the Elder Force Index. You'll see that on most of the charts, all of the charts I produce. And which is a well-known and very easy to understand and useful oscillator indicator. And I also use the moving averages, which are, as the name connotes, exponential moving average indicators, and a couple of volume. That's it. That's my whole tool bag. It's a basic technical tool bag, and I like to keep it that way. I do use a few other things on occasion, a Fibonacci retracement in the case of a large movement, but I don't overdo it. I keep it very simple. So that's my strategy, and I recommend that all. Well, I don't recommend it. You cannot succeed long term in this business without some sort of working strategy. Luck will run out, and the market will eat you alive. Thank you for that, Seth. And following on with that, perhaps you could tell us things to avoid. What to avoid? What you would avoid as a new trader? Well, there are a number of things I might say to that. The first is one of the things to avoid, and many newcomers make this mistake, is to open an account that's too small. Well, modern brokerages today will allow you to open an account with, I don't know, $500, maybe even less. Some of them. That's statistically insignificantly small. You can't possibly expect to make enough money with that kind of sum to stay in the game. You'll lose it. You'll lose most of it. You'll lose all of it very quickly. You won't have learned anything, and the experience will be bitter, and there'll be resentment, perhaps against your broker or your brokerage, and that's not the way to start. It's like going to Disney World with $1 in your pocket. You could, after you bought your ticket, they'd let you in, but you wouldn't have much fun. And you'd be bitter, and you'd hate Mickey and Walt and the whole family. So I recommend opening an account with enough money so that you'll be able to absorb some losses. You get the hang of it, be able to sort of figure out how the game works a little bit, and be encouraged enough to continue to trade and hopefully learn to trade successfully. Another thing to avoid is the lack of back testing. Many people will come into a market, and now we're talking about people who are not hobbyists or adventurers, but actually people who are more dedicated and serious about the endeavor. They won't back test. They'll say, well, here's my strategy, and now I'm just going to put my money and open some account. Well, that is a dangerous approach. What you'd like to do, ideally, and it's not hard. We live in the golden age of information. Tools are available for practically zero cost. You can go to FinViz, for example, and they have a fine back testing tool for a few dollars a month that they'll show you how to use, and it's a great tool. And you can say, well, if I did this, that, or the other thing, and in this or that asset, what would have happened? and you can run the tape, so to speak, and they'll show you. Or you don't even need a back testing program. You can go to the chart and see for yourself. Keep the ruler at the right edge so you don't really see what's going to happen next. Take a position, let the chart unfold, see what would have happened. That's all back testing is. It's not rocket science, is the term is often used. But many people don't do that. So I would say avoid not back testing, i.e. back test. And of course, people don't journalize. This is a fatal error. And you can't possibly expect to learn anything from your losses. And losses you will have, I guarantee you that. But in order to turn a total loss into a gain, to gain something from a losing position, you must understand what the error was so you can avoid it in the next trade. That's simply done by journalizing. And journalizing is a fancy name for paper and pen. Write down why you entered. Take a few notes. It's just about notes. Write down why you entered a trade. Write down when you entered the trade. In fact, some trading programs will let you actually push a button and record the chart from the moment you entered it and the moment you exited. And that's a helpful tool that I've used. I find it a little cumbersome myself, but I like taking notes. But it's irrelevant what the method is, as long as you have a method for understanding why and what you did. And I would go a bit further than that to say, because of the emotionality of trading, the journalizing function is crucial in monitoring non-market variables. Your mood. Did you have a spat with your spouse that morning before you sat down at the trading desk? Are your kids making you crazy? Are you feeling uncomfortable? Is your neck bothering you? Are you feel overweight? Do you want to get, is your body hurting you? Are you having psychological problems? Having money problems? Are you sleeping properly? Et cetera, et cetera, et cetera. If you can get a handle on those things, because they're so tied into the emotionality of trading, you will have an advantage. So not journalizing is something I would avoid it really quite seriously. Well, thank you. And Seth, finally, as in the last question of our interview, do you have any advice to give to traders and new traders or even veteran traders? Oh, sure. As I say, I've got 53 years of 53 or 51. No, I'm sorry, 51. I'm inflating my experience. I've got 51 years of experience trading in the capital markets. And so let me start by saying, read and learn. Now, despite my long educational pedigree, I had to learn trading by myself. Business school and economics school, they don't teach you how to trade. They teach you about economics and macro theory and supply and demand and all sorts of stuff, frankly, which is an enormous amount of bullshit. The economics is larded with utter nonsense. Anyway, but that's a different story. But in order to learn how to trade, you need to read and learn. And you need to develop a solid reading list. And that's easy to do. Again, in today's golden age of information, you get on the interview, you get yourself the internet rather, you get yourself a beer, a sandwich, and in a couple hours work, you can get enough reading for a lifetime. And I do recommend reading and learning. I also recommend spending money on news subscriptions. This is the classic example of a business where knowledge is power, and despite the golden age of information we live in, a lot of it is junk. Just like the golden age of rock and roll in the 1970s and 60s had some fabulous, fabulous gold and platinum wonders of music, there was also a tremendous amount of crap. And so just as in the golden age of information, there's a lot of noise and nonsense out there. So I personally have a subscription to The Economist, which I read from cover to cover every week. It's an arduous piece of work, by the way. I spend a good part of my weekend every weekend reading it, but it pays off. I do also read Foreign Affairs, a classic journal of international affairs, and I also read I have my Google News page is filled with financial resources. I regularly scan Reuters, Thomson. I have a subscription to Bloomberg, which I listen to in the background almost constantly. I would also advise you to spend money on a good charting tool. Now, you don't need to. I am a dedicated fan, and this is not a paid announcement. In fact, I'm a client of TradingView, but TradingView is the Rolls Royce of charting systems. I recommend you get involved in open up a TradingView account, and you can do it for free. I have a Pro Plus account because there are a few bells and whistles I enjoy and I find useful, but they're not utterly necessary. Again, I come back to the journalizing bit. Journalize, journalize. You got to you got to know what the hell's going on with yourself in order to be able to drive to play this game. Look, what we're doing, and let me just well, I'll say it now, coming to the end of the interview, and I haven't mentioned this yet. The metaphor I like to use with trading is picking up nickels in front of a steamroller, and that's not my invention. I've heard that before, and I believe it's very true. We live from the crumbs that fall from the table of the giants of any business, the traders and stocks and bonds, and foreign exchange and in commodities. There are players in these games that are so huge that we're like ants. We're like ants at a picnic. Nonetheless, ants can do very well at a picnic if they don't get crushed. Same with us as small speculators. So you want to have control over yourself to maximize or to minimize any sort of unknown variables and risks that are out there that could affect you. And you need to be aware of them, because if you screw up, this steamroller is going to crush you. You can't say, "Well, I'm smarter than the market." Forget that. That you're not smarter. The market will eat you alive. You've got to get in and get out. Don't be greedy. Don't let fear overcome you. When you get into a position, know when the hell you're going to get out, both profit-wise and loss-wise. So have that plan. You when to enter, when to exit, and that's simply based on your risk appetite. That's all. So how much stomach acid can you tolerate before you become uncomfortable, and stick to the plan. I would say that really is an important piece of advice. Yes. Well, thank you, Seth. Thank you for your time. It's been a pleasure, and we look forward to seeing your research and analysis and trading along with you in the future. My pleasure, and goodbye for now.